Welcome back, guys. Welcome back, guys. In this video, we're going to do accounting equation for grade 11 and 12. We're going to do accounting equation for grade 11 and 12. You get me? So, without wasting any further time, let's get into the video. So, guys, the first thing that you must know about accounting equation is that they give you something like this. You see, they give you transactions like this, and then now you must take the transactions and fill them on this table, which is your accounting equation. You see, so today they gave us 10 transactions that we must fill in here. So every time when you are doing accounting equation, just know that they will give you transactions that you must fill in. You see, so let's get into the first transaction. First transaction number one, they say purchase trading stock and pay 42,000 by EFT. So here guys, like we purchased trading stock and we paid 42,000 by EFT. We paid using what bank? We used electronic transfer. You see, so you'll come in at one. Under journal you will put cash payment journal. Why? Because cash payment journal we record all our purchases. When we buy, we record under what? Cash payment journal. You see? And then under account debited, you will put purchase. Why are you putting purchase? Because guys, we bought, you see. So when we buy, we debited. You get it? When we buy, our purchases increase, our trading stock increases. You see. So we put purchase here because we buy goods. And then account credited. Why are we putting bank? Because we bought by cash, so our bank decreased, and credit side is the minus side, you see, and then debit side is the plus side, you see. So purchase, we purchased more goods, so it's a plus, it goes under debit, and then bank, it's a minus because we took out money and bought goods, so it's a minus. And then you come to assets. Assets, you will say minus 42,000. Why are you saying minus 42,000? Because guys, we purchased goods, and when we buy goods, we use 42,000. We used 42,000. So that money we minus it because we paid it. So it got out of the business. You see, so it's a minus on our side. And then owners equity also minus because the business money is the owner's equity, so you must minus it. When we buy things, our money decreases. We don't get money. It might minus it because we bought something. And then under liability, we put zero because we did not buy anything on credit, so it's a zero. And then transaction number two, they say pay 3,950 cash for the delivery of the goods purchased. So here guys, like we paid 3,950 for the delivery of the goods purchased. So guys, here we paid 3,950 for the goods purchased. You see, for the delivery of the goods purchased. So when we pay, it's also a payment. So it goes to what? Cash payment. So come here, cash payment and then account debited. When we pay goods, when we pay for the delivery of the goods purchased, what increases? Our purchase increases. So you come here with purchase. Because we bought, like, why am I saying purchase? Because guys, you pay deliver for the goods that you bought. You see, so those goods we purchased them, so our purchase increases. Like I said, guys, debit side is the increase side, and then credit side is the minus side. You see, it decreases under credit, and then under debit it increases. And then here we put Why? Because we paid cash. So every time when we pay cash, we pay using bank. Wow. So it's bank because our bank it minused our bank decreased when we paid for those goods. Wow. And then here you say minus 3950 minus 3950, and then here is C. Wow. Why are you minusing 3950? Because guys, when you buy, you use your own money. We use the business money when we buy. So the business money decreases. It doesn't increase when we buy. It only increases when customers buy from us. You see. So what are the things we minus? What are the things we minus? Because asset, so guys, asset we minus, owner's equity we minus because asset is what the business owns. So we own our money, and when we buy, our money decreases. So we must minus. And then number three, they say total cash sales of 182,388. And then the customers were granted 10% trade discount on all purchases. You see. So here guys like we sold stock for how much? For 182,338. Wow. So when we sell stock, it will increase in our side. So the first thing that you must do when you get an adjustment like this, you must say plus 182,338 plus 182,338 and then 0. Why? Because guys, when we sell stock, we make money. Wow. So that money, it's a plus on our side, it's an increase on our side. Wow. And then the other part of saying customers were granted 10% trade discount on all purchases, it's already recorded. You see, us we have the total cash sales. We only record the total cash sales. We do not multiply anything because we have the total and we only need the total. Wow. And then here you will say spend. And then why are you saying bank? Because our bank increased, guys. But when customers buy stock, our bank increases because they put money in our bank and our bank increases. Wow. And then this side you say savings. Wow. Why are you saying sales? Because when we sell goods, our sales they go down because people buy goods, so they take the sales. They take the sales. You see, the sales minus. So you put sales here. Oh, like I said, guys, account debited is an increase. Account credited is a minus. See, so when something increases, you put them here. And then when something decreases, you put it here. You see? Okay. And then number four, you see stock purchased on credit for 157,600 and paid 28,110 for import duties. Okay. So yeah guys, like we purchased stock on credit, wow. And then we paid 28,000 for import duties. So the first thing that you must record is okay guys, here it's cash receipts journal because we received money. It's cash receipts. And then number four is gonna be creditors journal. Why? Because we bought on credit. Creditors journal, and then when we buy goods, what increases? When we buy goods, our purchase increases because we buy more goods. So our purchase is what increases. Wow. Our purchase increases. And what minuses when we buy goods? Our creditors control it minuses. Wow. Because we bought goods on credit. So here it will be what 13 because it increases 13. And then here it will be what kilometers control. Control. Because creditors control, guys, is when we creditors control, guys, is when we buy goods on credit. We record them under creditors control. You see. And then okay, under assets it will be minus 127,600. And then under owner's equity, it's man, guys, I'm sorry. Again, we bought them on credit. So when we buy goods on credit, it will say minus owner's equity of how much? 147,600. And then plus 147,600. Why am I minusing owner's equity? Because guys, you buy goods, and when you buy goods, we use our business money, and our business money is the owner's equity. So it minuses because we bought goods. You see, and then liabilities it increases because our debt went up. You see, when we buy goods on credit, our liability goes up. Bravo. And liability, guys, is when we buy goods on credit. So here we bought goods on credit, so they increase. You see, and then owner's equity they minus because we use the owner's equity money to buy goods. Bravo. And then under assets we just put zero because there's nothing there. You see, and then this one you will say import duties. And then here you will say creditors control. And then under assets you will say zero. And then owner's equity is minus 28, 110, and then here is plus 28, 110. Why are we saying this? Because guys, Barry and paid 28,110 for import duties. So here guys, we paid 28,000 for import duties. And remember, we bought our goods on credit. So when we buy them on credit, they increase our liabilities. Bravo. So even when you pay for import duties, they still increase your liability because it's under credit. Bravo. And then owner's equity, you minus because guys, when you pay, you take out money out of your pocket. So when you take out money out of your pocket, you will be left out with no money. You see, so it's a minus because we pay every time when you pay it's a minus, but when you receive it's a plus. Bravo. And then assets is zero because we did not take any assets. Bravo. And then number 5. They say credit sales to customers. So this one is easy, guys. Like we sold sales, like we sold goods to customers on credit. So it's what debtors general. So debtors general, guys, is when we sell goods on credit. You see, those people are debtors. So what increased? What increased? Debtors general increased. So you say debtors control. Debtors control. Because like I said, guys, David is increasing, account credited is minus. So what increased here? Our debtors control account increased because we sold goods to debtors on credit. So debtors control account will increase because more debtors are getting goods on credit. So it increases. Bravo. And then what minus? Sales. Our sales went down because when we give people stock, they minus our sales because they keep on buying goods. So our sales go down. Bravo. Sales go down. Bravo. And then here you will say plus 274, 200, and then plus 274, 200, and then 0. Because we did not make any debt. So that's why the equity is zero. We made no debt. And then owner's equity, we plus the money, the amount, because guys, it is sales, and when you sell goods, you get money. So we receive the money. You see, and every time when you receive money, you do what? You add plus because we received money. Even if you sell on credit, you still receive the money because they will pay us. So it's a plus on our side. You see? Okay. And then number 6, they say the owner took stock for promotions. The cost was 23,780. So here guys, like the owner took stock for what? For promotions, and the cost was how much? 23,780. So you will see general because the owner took stock for promotion, so it falls under general was general. And then account deleted. What increased here, guys? What increased is our what? Promotions, guys. Promotions increased. So you can't really say promotions because when the owner takes stock, our promotions increased because they say the owner took stock for promotions. So what increases? Promotions, they increase. Our class is promotions because they increase. And then what minus? Our purchased minus because that stock we bought it, like we purchased that stock. And when the owner takes it, it minuses. So purchase will purchase will what? Will minus. And then under assets you say it's zero because we did not receive any assets. And then under owner's equity, you will say plus 23, 780, and then minus 23, 780, and then here is zero. Okay, why are you saying plus and minus? Because when he took the stock, he minused the business stock. Wow, so it's a minus, and then it's a plus because he used the stock for promotions. So that promotion will bring more money. So it's a plus again. Wow. And then liabilities, it is zero because we did not make any debt. You see. And then let's move to number 7. Number 7, they say stock returned to suppliers. So here, guys, we return stock to suppliers. So you will say creditors allowances went up because they allowed us to return stock. So it's creditors allowances came up. And then what increased? Our creditors control increased because we took back stock to what? To suppliers. So creditors control is the one that increased. Creditors control. And then what minus? Minus is purchase. Purchase. Why do purchase minus? Because those goods we bought them, and then when we take them back, they minus our purchase. Because when we purchase, they add, but when we take them back, they minus our purchase. And then you'll come here to zero on asset, and then under owner's equity, you see plus 27, 8 and 12. And then this one is minus 27, 8 and 12. So guys, why are we adding owner's equity? We are adding, it's a plus on the owner's equity because, guys, when they say returned, when they say returned stock stock to suppliers, it means that we took stock back. So when we take stock back, they give us what? They give us money back. So that money goes to the what? To the owner's equity. So it's a plus on the owner's equity. And then under liabilities, it's a minus because we took those goods on credit, and then when we take them back, we don't owe them anything. So it's a minus. We minus our debt because we don't owe them anything no more. We gave them back their stock. So when we give you guys back your stock, we do not owe you anything. I hope you understand. And then number 8, they say stock returned by customers. So here, guys, customers returned stock to us. Wow. So here you say rentals allowances enough. Why? Because we allowed them to return the stock. Wow. We allowed our debtors to return our stock. So it was under debtors allowances journal. And when we allow debtors to return stock, what increases? Our debtors allowance will increase because we allowed them. So debtors allowance, that increases. It increases because we allowed them. And then what minus is, and again guys, when debtors take goods on credit from us, we record them under debtors control. We add our debtors control. But when they return those goods, what must we do? We must minus them from our debtors control. So what minus is here? Debtors control because they bought the goods back. So you say under minus is what? Debtors control. Because they bought our goods back, so we must minus them from our debtors control. So it's minus debtors control. And then minus under assets, we say minus 14,100. And then here, minus 14,100. And then here, you see. Why are we minusing 14,100? Because the asset is what the business owns. So when our debtors, when they take goods on us, they will pay us. So it's an increase on the assets. But when they bring back the goods, it's a minus on our assets. So we say minus because they bought back the goods. And also we minus the owner's equity because they bought back our stock. Like, here's your stock back. So like when people say here's your stock back, you must give them their money back. Wow. So it's a minus on our side because they bought back stock. They did not take stock. So it's a minus because they bought it back. If they took it, it was gonna be a plus. So they returned it. It's a minus. Wow. And then okay, it's still recording. I was checking if it's still recording. And then number 9, they say goods purchased for 5,670 was incorrectly recorded under the sundry expense. Okay, so here guys, like we bought goods, we purchased goods for what? For 5,780, and it was recorded under sundry expense. So it's easy. You just say general, because it was under general sundry expense. And then when we buy goods, what increases? Our purchase, because we purchased goods. So our purchase account will increase. You can see purchase. And then they say those goods were incorrectly recorded under sundry expense. So we must minus what? Sundry expense. So we come here and minus sundry expense. You see? Guys, don't forget, I said that here under account debited is plus everything that increases, we put it here. And then under account credited, it's minus everything that decreases, we put it here. You see? So here, sundry expense, we minus it. So I put it under account credited because we minus it. And then access, you will say is 0. And then honors EPC is plus 5, 6, 7, 0. And then here is minus 5, 6, 7, 0. Why are we saying plus and minus? Because guys, we purchased the goods, so it's a plus on our side because those goods they come to us, so it's a plus on our side. And then we minus our sundry expense. So it's still our sundry expense. Now we minus it. So you must say minus under sundry expense. So that's why you're saying it's a plus because we bought them, and then it's a minus because we minus them under sundry expense. So it's a two-way thing. It falls under plus and under minus. So you must record both of them. And then the last one, it says that the owner returned stock taken for personal use with a cost price of 850,000. So here guys, like the owner, he returned goods with or he returned goods taken for personal use with a cost price of 850,000. So here guys, the owner, he returned the goods that he took for personal use. So when he returns goods, he will say what? Cash receipts China because we bought back our goods. And then what increases? Our purchase increases because those goods we bought them, and then Yana he decided to take them, so he minused our purchase accounts because we bought those goods, we purchased the goods, and then when he takes the goods that we purchased, he minuses it. But when he returns them, he adds it. So it's plus on our purchase. So you see, account credited, our plus side, our increased side is purchase. And then what minus? And again, he returned the goods. So when he returns goods, he minuses the drawings. Because guys, when he took the goods, he added the drawings of the business. It's a drawing when he takes the goods. And then when he returns the goods, it's a plus on. When he returns the goods, it's a minus on our drawings. But when he takes them, it's a plus on our drawings because he takes the goods. So it's a plus on the drawings. But when he returns them, it's a what? It's a minus on our drawings. So you can't say drawing because it's a what? It's a minus on our drawings. You bought back our goods. And then here you will say 0, and then here minus 850, and then plus 850. And then under liability, it's also 0. So why are you saying plus and minus? Because guys, the purchase account is increased. So it's a plus. And then drawings, it's minus. So it's a what? It's a minus. There you go, guys. Simple. And then number 11, it did not appear on the accounting equation answer book. It was not there, so we must not include it. So guys, that's how you do an accounting equation for grade 11 and 12. This one is different from the one in grade 10. So yeah, guys, if you watched until the end, thank you for watching until the end. Please subscribe, guys. Please subscribe and like the video and share the video with your classmates, guys. Please subscribe, share the video with your classmates, and please get into the 500 subscribers, guys. Please. So thank you for watching until the end. God bless. Before, okay, 2.1, they say list the advantages and disadvantages of a periodic system. So guys, advantages, you will say stock is updated instantly or after sale. And then disadvantage, you will say need software, scanners, and technology, or whatever. It's fine, I'll put the answers there. So thank you for watching until the end. Please like, comment, and subscribe, guys. If there's something that you don't understand, comment down below. I'll help you. I don't mind helping you. If there's something that you don't understand, comment down below. I'll do another video explaining that thing. You get? So thank you for watching until the end. Peace. Sure.